In 2021, Nike acquired a Web3 native brand for hundreds of millions of dollars. $1.4 billion in trading volume, over $100 million in sales, and a cult-like following. So why did Nike shut it down in just under 2 years? I'll be doing a deep business breakdown, everything from marketing, positioning, strategy, ops, and missteps, in a way that founders, builders, and investors can actually apply in their business. In 2021, Nike acquired a Web3 native brand for hundreds of millions of dollars. $1.4 billion in trading volume, over $100 million in sales, and a cult-like following. So why did Nike shut it down in just under 2 years? I'll be doing a deep business breakdown, everything from marketing, positioning, strategy, ops, and missteps, in a way that founders, builders, and investors can actually apply in their business. Here's a quick overview of the video. I'll go through RTFKT's background, timeline breakdown, business model deep dive. So there'll be everything from product development to sales to operations. I'll share the risk and constraints RTFKT has, some key lessons for Web3 investors, founders, personal thoughts, and that'll be pretty much it for the video. Okay, right before we start, just full disclosure, I bought one Clone X, which is NFT in the RTFKT ecosystem for like $8,000 2 years ago. I bought it mainly not as an investment, not even through like no angel investment, no me thinking like, oh, like I think this will go up a lot. Of course, I would like it to go up, but I bought it more to really learn about the space. And I think there's nothing better. There's one of the best ways to learn is just to buy the products, the NFT, and experience the whole thing. And the next thing is I'm not affiliated with RTFKT at all. I'm not affiliated with Nike. This video is purely just for educational purposes for founders, investors, and builders in the space. So here is RTFKT's background. They were founded in January 2020 from my research. Here are the founders, Steven, Benoit, not sure if I'm pronouncing your name correctly, and Chris Le. They've raised a total of $9.5 million from Galaxy and A16. Total revenue, the estimates online were like 100 million plus, so I just put it here conservatively. NFT trading volume, $1.4 billion. Team size, I gave a range to show the arc. So obviously they weren't starting off at like 30 to 50 employees. This was just an average over the course of the time they started the business and the time they closed, which is March, in the middle of March and April 2025. And here's an overview of the timeline. I think a few key ones that I'll highlight would be they first started with digital cyber sneakers. So at that point in time in October 2020, this was like super new, super cool. And I think this is a one-of-one drop. So they sold this for $90,000, which was 30 ETH at that point in time. And during this period, they also did a pre-seed of $1.5 million. And after that, some collaboration, so on and so forth. And then the big drop, which is I think what they were famous for, is in November 2021. This was the Clone X drop with Takeshi Murakami. So this was like the thing that really made RTFKT. And then shortly after, Nike acquired it for reportedly $100 to $300 million. Who knows what they actually got? Sometimes all these deals, you see a headline, but who knows what the dilution was, how much the founders got, what the split was with the team was. Okay, here is the meat of the video, right? Which is the business model breakdown. My objective is really for you to understand how the business functioned. Okay, so you guys can really visualize, like if you guys were the CEO, what was the business like, right? What was the hiring like? What was the day-to-day operations like? The cash flow, and I hope to do a good job of giving you guys a good visual of that. Okay, the first department I will go through is product development. So a lot of times this gets thrown a lot around social media, right? Oh, you have to build a good product. You have to like, a product is everything. But what really is product development? So to dumb it down simply is that the key output to know if you have done product development well is if you have achieved product market fit. I think the key things I want to share about RTFKT is 3 areas. So product development, vision development, and customer understanding. So from a product development standpoint, people talk about MVPs, right? So what was the MVP of RTFKT? I would say the MVP was the cyber sneakers. Okay, they started off with the cyber sneakers first. That was MVP. They sold it. They made some money. I think that gave them validation, and then they moved on to profile pictures, which was CloneX, and then they did other stuff, collaborations with Remoa, LVMH, so on and so forth. Okay, and I would score them a 5 in the early days, so a 5 out of 5. They really nailed the product development in the early days, I think, and this is can be shown in the market response. But I think towards mid 2020, 2023, they started to just decline to a 2 out of 5. So you can say I give them an average of 3. Yeah, but I think it's more accurate to give them scores in different timelines, right? Because the business changes and the business flows. So I'll say 5 in the early days, 5 out of 5, and then towards mid 2022 onwards, I'll give them a 2. Okay, vision development. I would say their positioning, from my understanding, was to position themselves as like the Nike in Web3, the Nike of the metaverse, digital collectibles, digital sneakers. And I thought that was an amazing positioning. I don't even think they had a close second competitor at all. So I'll give them a 5 for this. Even towards the end, I still think that they dominated this headspace for a lot of Web3 natives. And yeah, so I'll give them a 5 for this. Next part would be understanding the customer. And I'll share more about this in the marketing section. So at a high level, I think they targeted 3 types of users. One would be crypto native collectors. Second one would be gamers. Third persona would be sneakerheads, people who are in the streetwear game, right? Flipping clothes, Supreme stuff. I think these were the 3 personas they targeted. And yeah, I'll give them a 5 for this because I think they did a really good job of having a mixture of satisfying people who are already crypto native and also onboarding new users, people who are, you can say, crypto aware but not really involved in the space, right? Maybe they didn't want to get involved in the cryptocurrency side, but they want to get involved more in the digital asset side. So I think they did a really good job of positioning themselves here and understanding the customer. Okay, here are my 2 cents. I wrote down some like MVP notes, which I won't go through in detail because it's going to be too long. But just to give you guys an idea, let's just imagine you guys were you are the CEO or you were in a C-suite team in the early days of Artifact, right? I'll imagine they would think of, okay, what would be, like, which customers should we go after first? What kind of customers are willing to use a bad product? Which are the customers that are the easiest to get to, right? And here are just some criteria that I've also used from own businesses on how to think about what would be good customers to go after first. So the first thing is, how frequently do they experience the problem that you're trying to solve? How intense it is, right? How painful it is to solve this problem. And usually a good problem to solve is something that is very intense and super frequent. So a good example would be like weight loss, for example. Let's say you're like really obese, you're having health challenges, you feel the pain frequently, and it's super intense. So it gets to a point where you want to pay money to solve it. Yeah, so just an example of what would be a good kind of problem to solve mixed with a good user to go after first. So here's just a simple table of what my guess is of the early users that they went after first. You guys would think that, like, let's say NFTs, this type of company, what problem are they actually solving? Right, they're selling like online digital sneakers. Like, what problem are they solving? I think the problem that they're solving is a user that wants to flex their status, wants to flex their identity, right? And they're heavily in the digital space. So they may already be buying a lot of like Rolexes, streetwear stuff, those very expensive streetwear products, streetwear sneakers. And they're very involved in the digital space too, right? So the problem is that there is nothing that they can buy for them to flex or for them to show off that they are doing well in the digital space, right? They can do it in games, but they can't do it outside of games in the internet at scale. And I think that Artifact solved that. Not just Artifact, I think Bored Ape Yacht Club also solved that, right? A profile picture that cost like $500,000 in 2021. People could buy it, and there's this like digital flex of, oh wow, this guy owns a $500,000 profile picture. One other mistake that I think Artifact could potentially have made is that they didn't prioritize product strategy after achieving product market fit. So let's say they hit product market fit with CloneX, right? but they didn't double down on things like thinking about utility, retention, expansion of the use case. So let's say if you look at things like Bored Ape, initially it started with a picture. Expansion of use cases could be now you guys can use it in a game as a skin. Now you guys can use this as an access pass to a club. I think CloneX didn't do. It seems like they didn't do a good job of that, or at least not at a scale that I think was required to sustain and to satisfy their holders in the space. So there's one thing that I thought of. And the next thing would be lack of structured product planning. But I felt like they were initially solving, like really creating something for a user. But after that, they were just doing a lot of collabs and you can say more of like chasing hype. But who knows what's going on behind the business, right? Maybe there were some internal challenges. Maybe there were leadership challenges. You know, when you're working in a company, sometimes as you grow, when there's more money at stake, there could be conflict within leaders. Who knows what was going on? I think CloneX had the opportunity to build a creator platform, and this may not have been their roadmap, but this is definitely something that I think it's a rare opportunity missed because they already had such cult-like following of the CloneX PFP. Like, what if they partner with a company like CS:GO, right, using CloneX as the skins to onboard existing user base in CS:GO? Okay, why did I say CS:GO? Because CS:GO is, if I'm not wrong, still the largest digital economy for skins in the world right now. People that already have are gamers. They already buy digital products. So to partner with them and to get the distribution of all their customers, they already have existing user base that were likely crypto aware, play games, and buy online products. So I thought like they could do like a very cheap, low ticket CloneX product, maybe instead of. So I think CloneX at its peak was like 30, 40, 50 grand. It was in the 5 figures for sure, right? What if they did like a $10 to $50 product, skins on CS:GO mass market to onboard people into the CloneX ecosystem? I thought that's something that I would definitely consider. Let's say if I was to put myself in a position of CEO as Artifact, I think this could be insane. If they could pull this off, even just this one thing, if I stop the video right now and they just release one thing and they manage to pull it off, I think it could be crazy. Yeah. Okay, so this is everything for product. And yeah, I hope I didn't go too long because I could have talked way more about the MVP. But yeah, there's some notes here for the viewer to see if they want to. Second department, the marketing department. So what really is marketing at a high level, right? How do you know if you have done marketing well? The key output of marketing is to achieve leads. So let's say the business has the objective, they set like objective key results. These are the goals that they want to have. Is the marketing department achieving the leads that allow them to hit their objective? And usually the objective would be like revenue, profit, objective type of thing. So this obviously changes as CloneX grows, right? But just imagine with the timeline I shared earlier, the company in 2020 to the point where they built CloneX, they launched CloneX, and then they went on to do other things to the point where they closed. Just imagine you're looking at their business dashboard every single day, looking at the number of leads that they have. And I think if you guys have this visual, you guys can imagine that the leads was heavily skewed towards the launch days, right? So like on the days that they were launching an NFT project, like the days they were doing like a drop of a collaboration with another brand, or they were launching a new NFT or just some new announcement, they would have a huge spike. But the other days they would pretty much, I believe, have quite a lull in terms of leads. And this is not necessarily a bad thing, but I think it's worthwhile to highlight this because most NFT projects in the space, most Web3 projects in the space right now live and die by the launch, right? If they have a good launch, they need this money to sustain to their next launch, which is why a lot of them do tokens and they do like TGE events and stuff. But the ones that I think are really, really successful and can be here for a long term, they're able to have recurring revenue on top of the drops. So companies like Pudgy, I think like Veefriends right now, and maybe Bored Ape. I didn't really dive deep into the ecosystem yet to understand, but these are just some examples of brands that I think do a good job of mixing drops with something that is recurring revenue so that the business is actually sustainable and it can grow in a healthier manner. Okay, so I would judge their marketing department from 4 areas. One would be the marketing mix, the strength of the marketing mix. The second one would be the timing. Third one would be the users that they target. So earlier I shared that I'll dive deeper into this. So here I will really go deep on like what kind of users that they target, and also competitive positioning. So so a marketing mix: price, promotion, place, and product. An example would be, let's say in the early days when they did the crypto kicks, right? The price was, I think they did an auction, so a free auction. Okay, promotion, they did it on one of those like auction platforms like Super Rare or something, right? Place promotion would be on Super Rare, and the product was like a crypto kicks that designer did. So this again is the MVP. I believe it probably didn't take them that long to actually create this, but because the market timing was so good. Okay, why did I say it's so good? Because if you look at this like market sophistication chart, which I've shared before in previous videos, NFTs was still in the early phases where they could, like, if you just say you launch an NFT and it's slightly interesting, like, oh, this is an NFT that is digital fashion, even without anything else, like, people would buy it. But let's say right now in 2025, May 2025, the market is way more sophisticated where you can't just have a digital art of sneakers and you expect it to sell for thousands and thousands of dollars. The market has matured. There's also AI right now. Digital art is easier to generate digital art right now than it was in 2020. So at that point in time, this I thought was like really amazing marketing mix and really amazing timing. Okay, but as you can see, like as CloneX, as Artifact grows, let's say CloneX did like super well, like amazing marketing mix, amazing timing. But after that, I felt like the team didn't really adapt to the maturity of the market. As the market got more mature, companies, Web3 companies needed to level up their offer, and it seems on the surface that they didn't really do that. So this reflects really in my score here. I gave them a 5 in the early days and 2 post CloneX. So this is pretty much like the story of most of the scores I have is like they have like 4 or 5 in the early days, and post CloneX, I just felt like something just switched in the team for some reason. They just didn't really. It seems like they didn't really level up given the way the market was moving. Yeah, again, it's easy for me to say, as someone that is just commenting as like a case study on Artifact. But if you are running a company with investors, with co-founders and a team, who knows what was really going on behind the scenes. So I'm not saying this to knock on the founders, but I'm just saying this just to have a very objective view of what they did well and what they didn't do well. Okay, next part would be target users. So I shared a little bit on this earlier on the product side. They targeted crypto native collectors, early adopters of NFTs and digital assets, gamers, right? People who are already gaming, because a lot of people who are gaming, they're already into this like digital world, role-playing world, and a lot of them already bought digital products. So especially the ones that were having this persona, on top of that they have money. I think this is a good intersection of people to target. I say this because I think I'm a little bit in the audience. It's like I was growing up, I played a lot of games. I made money through business, and I could relate to this whole digital metaverse, online skins type of situation. So next persona would be sneakerheads and streetwear fans. And I think this is something that they did really well in. They were able to market to, I would say, leaning more towards the side of unaware audiences, right? People who maybe weren't that into the NFT space, but were interested in streetwear. They were maybe already in the Nike ecosystem, right? And they were able to onboard people who like, wow, this is, like I could buy sneakers in real life. I could also buy sneakers in the digital world. I think they did a really good job of onboarding to unaware audiences, at least at the beginning. And also, I think they targeted digital creators, artists who were looking to just be on the cutting edge of digital fashion, digital fashion tools. Right? This was so new at that point in time that I think even just having something even just selling something in the arena, there was literally no other competitors. So they were pretty much a monopoly in the space at the time. For competitive positioning, I would say that they position themselves as, it's a bit like a juxtaposition of Board Club. So Board Club had this positioning of targeting like traders in crypto, people who are gambling, people who are in the crypto space, who had this vision of, or like the dream of, like, I want to make a lot of money, get a yacht, get a nice car, go to Miami, and I'm so bored because I'm so rich. I think Board Yacht Club had that coolness factor, and I think for CloneX, they had this persona of futuristic gamers, people who are into all this like art, anime a little bit, and I thought that was like a very good positioning that they had. They separated themselves from Board Yacht Club and this type of user, and targeted this type of user by having a PFP that people would be proud to represent, people would want to aspire to. And yeah, especially for this, I would also give them a 5. So yeah, sure, overall their score for this would be fairly high in terms of their marketing. Here are just some of my high-level views before I move on to the sales department. So I've just shared about the positioning, which I thought was amazing on the artifact side. Second part would be I'll share again. I know I'm saying this again, but the artifact is very launch heavy. It's like they rely too much on launches, and I think this is really the death of a lot of Web3 companies. They are just too reliant on the launch, and I was sharing earlier that if you imagine looking at the business dashboard of a company like that, maybe for 1 week they have like thousands and thousands and thousands of leads, and then they could have a period of just a complete lull. So yeah, I think this is huge risk on any project, and something that I think a lot of founders could be aware of to build when they plan out their business. The third thing is, I think that they could potentially also rely too heavily on inbound marketing. So at the beginning, they obviously have to do outbound, because I don't think they had an audience at the start. But as they, for some reason, like when they had the CloneX thing, I felt like they just stopped doing a lot of outbound stuff, or at least a lot less outbound, and they did a lot of inbound marketing. So, which is good in a way to increase the LTV of your customer, but how much money do you really want to extract off your user, right? And this is NFTs here. So people have a very different expectation than, let's say, in the Web2 side. You can just keep selling them sneakers, new designs, new models, which is the model that I think Nike has, having a lot of new designs of sneakers, collaborations, and the LTV of sneakerhead could be hundreds of thousands of dollars, right? But in Web3 is a little bit different. So I think this is something that I am unsure how the team thought of too. Very important. I'm not saying it's easy to do, right? This is like not an easy type of business to do. It's very new. No one has really nailed a model that everyone can copy as per se. But yeah, I would say these are my high level, these are just my 2 cents of artifact on their marketing department. Okay, their next department, sales. Sales is something that seems super foreign to Web3 companies. Like no one talks about sales at all, or at least the Web3 companies that I've interacted with, they don't really talk about sales at all. It seems maybe not very sexy to talk about, but it is very important. I can tell you guys exactly how the top Web3 companies are doing it. Okay, so what is sales, right? The output of sales is orders. Can you get people to buy? So the marketing getting the leads, and sales getting people to buy. The 3 criteria that I'll judge artifact on would be the sales strategies and playbook, qualification of leads, and the campaigns with that will work hand in hand with the marketing team. So for their sales strategies and playbook, I would score them a 1.5, maybe even less, and I can tell you guys why. So I hope I'm not being too harsh here, but for their sales, they don't even seem like they had any sales department or sales staff at all. Okay, why is this important? People are spending thousands of dollars on your digital products, which for Artifact at least is a huge revenue driver for them. I think at least at the beginning, they were mainly making money through royalties. So if you imagine someone going to spend so much money to buy your digital asset, right? Your NFT or digital asset, whatever you want to call it. it would be good if they have some kind of service to get people to onboard, to guide people to buy it, especially in the crypto space, right? To set up a wallet, to set up your Coinbase account, your MetaMask wallet, to know which exchange to buy Ethereum on, then to transfer the money to your MetaMask wallet, to go to OpenSea. Each stage you could easily get hacked or scammed, and for people who are OGs in the space know that when you first get in, it's a bit clunky, right? Like the tech is still a bit clunky. So companies, let's say I see who are doing a good job of this would be, let's say if you look at Cryptopunks. Cryptopunks has people like, let's say Punks OTC helping. I think Punks OTC built a big network of Cryptopunks holders and also business owners, people who are wealthy. And whenever someone wants to buy a CryptoPunk, a specific punk that, let's say, looks like them, they go to Punk's OTC and he helps them to find the seller of the punk, right? And I think in between, he makes a little bit of money. There's people like this in the CryptoPunk space. Maybe they have broker fees, platform fees, or however they are charging, however they're looking to make money in between. Because this is going to, like, Punks is a six-figure, okay, now I think it's like 70 or 80K, but at one point it was like $400,000 or $500,000, right? There are people, of course, that just go online and they are willing to buy it even without any of this service. Usually crypto natives. But if you want to onboard new users into the space, it could be worthwhile to think like, hey, is it worthwhile to hire a team of salespeople, let's say 5 to 10 people, to manually onboard each person to buy your NFT that costs 5 to 6 figures? If you do the math on how many people can your sales team get to buy every single day for month after month after month for years, it could be worthwhile financially to create a sales department for your Web3 project. Another example of a company that I think did a really good job of this is Veefriends. So Veefriends did this thing called like a white glove service where people who want to buy their first Veefriend will get a white glove service from someone on their team one-to-one to help them with anything with like ETH, exchanges, and then to buy a Veefriend, right? And I think that was like super smart of Gary to do. And not surprisingly, a lot of the founders of Web3 companies that had previous business experience usually have some sort of sales department. They may not call it sales, right? But essentially it's sales. And I think it's super underrated. And I hope to see more Web3 companies in the future incorporate this in their business. Okay, next thing would be qualifying leads. So maybe I can give you guys an example. Let's just say right now someone comes, okay, so let's say you own a gym. Someone comes to your gym and wants to potentially get a personal trainer, right? So you have a sales staff that goes to the person, and that person, your sales staff will ask the person questions like, how long have you been going? How long have you been looking to lose weight? What have you tried before this? What's your goals, etc., etc., etc. Basically qualifying the lead, nurturing the lead, building rapport, and then offering your personal training package or your gym transformation package to the client. And I believe for NFTs, something like that could be done to, like, let's say if I was, just a thought of my head, let's just say if I was to do sales for CloneX at that point in time, right? There's so many people in Discord who aren't CloneX holders. There's 40 to 50,000 people in the Discord who aren't CloneX holders. Maybe I would just go to the people who are typing in general chat. I would get them on a call, message them, and ask them like, hey, what's your background? What do you do? Are you looking to buy a CloneX? What CloneX trade do you like? Why do you like it? Help them to pick one. This is a sales experience that I think is missing. It seems like super manual because everyone wants to automate it, and everyone don't think this is scalable. But if you think about it, there's 20,000 CloneX. If you get a team of 5 or 10 people every month, every single day, getting on calls with people who want to buy a CloneX, it could be worthwhile to consider this. Okay, anyway, I'll move on to the last section, which is the campaigns with marketing team. So this is the part that I think they really nailed it, of having very culturally relevant campaigns, like partnerships with like Takeshi Murakami, Rimowa, having really like insane design. I think it's one of the best design teams I've seen in Web3. People can hate them or like them, but you can't deny that they have really amazing design. It really resonated with the market. Just having nice design help them to grow into this giant company in such a short period of time. And I think they really nailed this part. But again, I'm saying this again. That's what I said when I was going through the marketing part. They don't have anything recurring. It's too drop heavy. So I'll still give them a 4 out of 5 of this. But overall, I would say their sales is probably one of their weakest departments. And overall, I'll give them a 5.5 out of 15. And okay, here, similar to what I did for the previous 2 departments, here are my 2 cents on the sales department. So the first thing is, I've shared this already just now. These are high ticket items. A sales strategy, in my opinion, is very important for long-term consistency of sales. And it seems like, also generally speaking, in Web3 projects, sales is one of the weakest departments from both the B2C side and B2B side. It seems almost completely non-existent, which is kind of shocking. Okay, just before I close the topic of sales, maybe I'm just too old school, right? Like, I'm someone with more of a background of running e-com businesses, SaaS companies, you can say Web 2 right now. And maybe I'm used to having more of this, and I think this really increases the LTV and, to me, the health of the business by having a really good sales team. It'll be cool to see more Web3 companies having really solid sales teams, apart from just a handful right now. I think I can name just like less than 5 companies that I can think of in Web3 that have like an insane sales team. And not surprisingly, they are doing the best. Even outside of judging the business revenue and the health of the business itself, even on the floor price, I think they are having the healthiest growth as per se. Next department, operations. What is the output of operations in Web3? So I've segmented it to 3 parts. The first part would be production, customer service, and support. So for production, what is good production? Good production would be efficiently and reliably scaling your delivery of core product. And I'll share what this means for Artifact in a bit. Second part would be customer service. So can you retain, satisfy, make your existing holders happy, right? Can you make them even happier? And okay, I'll touch a little bit right now why this matters. So imagine you make your existing NFT holders super happy. What ends up happening is that they are less likely to sell. So they'll hold, right? So when they hold, the supply gets less. So it would lead to a price increase. And when the price increase, people buy it with, this obviously have to work in synergy with other departments. People buy the higher price NFT, company makes a royalty, and then it just snowballs and snowballs and snowballs. It seems crazy that customer service is so important, right? But anyway, next one will be support. So support would be building scalable systems that can sustain scale. So let's say in a typical e-commerce business, it will be having good logistics, people, tools, control, so that even when your revenue goes up and you're selling lots of product, you have the support to sustain that growth. And this part, this is the parts where it may seem like not very sexy, but I guarantee if a company does not have good operations, they just simply can't grow. And this is another area, apart from sales, where fortunately or unfortunately, I think Artifact didn't really do well on. So these 2 departments, I scored them like really low, as much as I really want to score them high because I really like this type of business. It's just unfortunate that these 2 areas, for whatever reason, who knows what the reason is, they didn't really nail. Okay, these are the few criteria I would judge the operations for Artifact: production, capabilities, customer service ticketing. Support will be finance, legal, logistics, human capital, and I'll also go through their operational cost. Okay, so just to quickly touch on operational cost, as shared earlier, their team, I think, had 30 to 50 people, so this is just a high-level makeup. I just honestly checked online, few sources, ChatGPT, cross-check a little bit here and there. Who knows what the actual makeup is, because I don't think it's disclosed fully. But yeah, I estimate that their annual payroll, especially at the peak of the business, was $2 to $3 million a year. Payroll, which is a lot of money. If you were to check the amount of money that they raised and the royalties that they got, you could burn through that cash real quick, especially if the founders are taking huge salaries, which I think they were, which is okay, right? Nothing wrong with that, but if you want to take bigger salaries, then you got to make sure that you can grow the company. First part, production. So I think that it seems like the planning of the digital and physical product releases, the roadmaps were often overpromised, and there was a lot of overpromise and under delivery, which usually leads to a lack of trust. Usually, you erode trust over time, right? It's synonymous to, let's say, if you date a girl and you overpromise a lot of shit at the start, like you try to front and you flex a lot, but when the relationship goes, you are kind of under delivering on the promise. So that will lead to the girl trusting you less, right? So I'll give them 2.5 out of 5 for this. Next part would be capabilities. So again, is the team capable to execute the roadmap? I understand that oftentimes Web3 projects have a tendency to want to oversell their roadmap because this allows them to jack up the floor price more, make more royalties, and have better headlines. But to execute on them would be extremely hard. So again, here I'll give them a 2 out of 5. Customer service and ticketing. So here I can refer below because I wrote this under my 2 cents. Customer service and ticketing. My guess is that there was no clear customer success roadmap, which is, again, unfortunate for a lot of Web3 projects. They seem to not have a clear customer success roadmap. For customer service and ticketing, it seems like they didn't really have a customer service roadmap. At least from what I've seen from looking at the business, I don't think they have it. It's very Discord heavy, which is unfortunate that this is so common in a lot of Web3 brands. Next part will be ticketing. It seems like super inconsistent, more about, vibes, like crypto vibes, project vibes. The vibes are good, but no real like ticketing system. These are all very unsexy things in the business. And I know that in crypto space, people don't really care about all this stuff. But if you are really scaling the business, these are the things that could make or break a company. I would actually say that you can say like an unconventional take. The customer service arguably creates the vibes of the community, because when you interact with a Web3 project, you interact with the customer service, you interact with the mods, you interact with the team, right? So this is customer service, and this creates, to a lot of degree, the vibe and the culture of the community. So it didn't seem like they had a lot of consistency here. And yeah, okay, next part would be support. I think that support probably got a lot better post-acquisition. So pre-acquisition, I'll probably give them like a 2 out of 5, 1 out of 5. Post-acquisition, I think with the Nike infrastructure, they probably have like insane legal and finance. So yeah, you can say like a 1 out of 5 1 out of 5 like pre-Nike, and let's say 4 out of 5 post-Nike, you can say, or 5 out of 5 post-Nike. Okay, logistics and infrastructure. They were kind of infamous for slow delivery. So let's say if you were going to get a shoe or luggage, they didn't really deliver all of it on time, lots of delays. So I'll give them 1 out of 5 here. So you guys can see that if you guys are actually running this kind of business, you can get the sales in the headline, right? But can you actually deliver the product on time or not? This goes back to infrastructure, warehousing, especially for this type of companies. They were shipping worldwide. Do they have the infrastructure to ship worldwide or not? Shipping costs for different countries are different. So did they account that in the cost, right? It's not that easy to really do this type of business at scale. I think people really underestimate what it takes to really run this on the back end. Okay, so overall, I would give them a 5.5 out of 15. Not that good on the operation side. Yeah, the operation side and the sales side, I think, was really what caused the decline of Artifact, at least on paper. But as you guys know, usually it's the leader psychology. I think something must have happened on the leadership side that has caused the decline. Who knows what has happened? And yeah. Okay, the last department that I'll go through, there's actually more departments, but these are the few ones, the few key ones that I think are the most relevant for Artifact. So this department is what I just call like stakeholder satisfaction, managing stakeholders. This is the thing that separates a Web3 company from a Web2 one. Because users, customers of Web3 companies, they feel like they are a part of your business. So to manage the stakeholders here is a little bit more tricky. I don't think any company has nailed it 100% yet. It's not that easy, as you guys, people who are in the Web3 space, people who are native in the Web3 space, can understand what I'm saying here is I think every project, even the biggest ones, all had some degree of hate at some point. The output of stakeholder satisfaction is, can you build trust? Can you build alignment with stakeholders? And can you build this repeated buy-in of the vision? So for example, let's say for Boy Yacht Club, at the start there was this like vision of the Boy Yacht Club that was amazing, right? Everyone was bought into it. Everyone trusted the business. There was alignment with stakeholders. But now, very, very quickly, now the trust is a lot less, the alignment with stakeholders is a lot less, and the buy-in is a lot less. So you can see how important this department is in the sentiment of the business. So I won't go through this as in-depth as the previous sections, but just to give a high-level overview, if this section, if this department is done well, if this team is performing well, customers will keep coming back, your LTV will be higher, churn will be less, right? The founders will retain their team better too, the employees, the ambassadors, the partners, especially during tough cycles, which everyone in the space faced in 2023. Investors will feel like their capital is better managed. Again, it affects the sentiment of the business, right? And your reputation also compounds in the ecosystem, which again is so freaking important in Web3. Building in Web3 is hard because you normally before you even achieve product market fit, everyone is looking at you. This is why building Web3 is hard. You're almost not allowed to make mistakes, because the moment you make mistakes, everyone's going to scrutinize the mistakes that you make. But the reality of running a business is that you will definitely make mistakes, right? You often try things that don't work. Even Amazon tried things that didn't work. They tried like shit tons of experiments that did not work, spent billions of dollars, but the ones that they work are the ones that you know about. For example, like AWS. Yeah, this is the part where I think it's really tricky in Web3. It's interesting to see founders navigate this space, people like Gary, Luca, Garga from Bored Apes. Very interesting to see them navigate. And I think it's easy for bystanders to hate on them, but if you're not on the field, it's hard to relate. How hard is it to ensure stakeholder satisfaction? Okay, risk and constraints. Here's my take on the risk and constraints of Artifact. First one, which I've shared multiple times already, I'm probably like repeating myself right now. Operational scalability risk, right? They scaled too fast and their systems couldn't keep up. So things like physical fulfillment delays, no maturity in their customer service infrastructure, sales infrastructure, disconnection from logistics. If you do this well, you would nail the delivery here. But Gary really nailed all the delivery part. And I think it's because he has so much experience in running e-commerce with his wine business, infrastructure, hiring, leadership with VaynerMedia. It's not surprising to see like Veefriends doing so well on the business side of things. I don't want to comment on floor pricing. Floor pricing could easily be manipulated with market making. But in terms of the business standpoint, I think they're absolutely crushing. So severity, I'll give them a 5 here. Next one will be, I shared this earlier too, risk of lack of recurring revenue. Most customers are doing like high ticket purchases in the CloneX ecosystem, Artifact ecosystem, right? And then they just drop off. Where is the sales team? Where is the customer service? Severity, a 5 here, no recurring revenue. Next one will be over-dependence on hypes and drops. I've shared this earlier, so I won't repeat this again. Team capabilities, lack of COO, very risky. Last one will be, and I think this is something that every NFT project face, regulation risk. So again, tons and tons of risk, which is personally why I didn't invest heavily in the space, even at the peak of the peak of the peak of the peak of the peak. I didn't invest in CloneX and Artifact because I just felt like the risk was too high. And who knows, right? The project could have done well on the floor price wise, and could have been on paper a crazy investment. I have met people with like 50 CloneX, and on paper they were making like 8 figures. So who cares if at the end of the day you make money from an investor standpoint, right? Now I'm talking from a founder standpoint. The business itself, I don't think was necessarily that healthy, so I didn't really look to invest. And yeah, just before I end this part, constraints are usually, or if not always, on the leader. The business is usually a reflection of the CEO. So I think something must have happened. This is like my guess. If I was to bet money, if I was to bet all my Bitcoin, NFTs, my whole portfolio, I think something must have happened on the leadership side. I think something must have happened. with the co-founder side. So yeah, hopefully they're okay. I wish them the best. Like I have no hate or love. I'm just like completely just looking at this completely objective, as little bias as possible. Okay, here are some lessons for Web3 investors and founders. So Web3 investors, here are a few things that I think you can think through before you want to angel invest in a company, whether on the institution side or on the liquid market side. First thing is, could this business exist without blockchain? Second one would be, does this business really have revenue potential? Does it solve a clear problem? And is the team genuinely focused on building? Unfortunately, and I won't name projects, like 90% of Web3 brands are not really that focused on building. They're really focused more on TGE. So TGE will be token generating events. They just want to launch a token, which is okay. Like I get the game, I get the meme coin trading game. But if you're investing on an angel investing side, yeah, you just gotta be careful, right? And I shared this in previous videos before, but a dirty secret of crypto investing is the biggest funds on earth or the biggest traders on earth, they didn't outperform just dollar cost averaging the Bitcoin. Yeah, so I think this is a good way to measure the performance of your investments. And the last thing before I jump on to lessons for founders, an unconventional take that I have is that the best risk-reward investments are either very, very, very cheap pre-product market fit companies. So before the company has even achieved PMF, but you like the founder. You think the founder is sick, that you think the founder can achieve PMF, great investment, or very, very expensive post-PMF. So the company has already achieved product market fit. The token may be a little bit expensive, but at least it's done. Like that they're already there. And it's just about buying to hedge on the whole space, right? I think everything in between, not to say it's a waste of money, but I just don't think from a risk-reward standpoint it's worth it. So that's lessons for investors. And for founders, three things, very simple. Fundamentals are fundamentals. Like I don't care if it's Web3, blockchain, or whatever you want to name it. Business fundamentals are fundamentals. Marketing, operations, sales, these are all fundamentals, right? Technology may change and they may name it differently, but the fundamentals are fundamentals. So second part would be, tech so I shared this a little bit for the fundamentals point. Blockchain, AI, these are all accelerants these are all accelerators. These are not destinations, these are accelerators. So it will allow you to run the business more efficiently. But if you don't understand fundamentals, you don't have good judgment, you will likely also not succeed in the business. Last thing is, the floor price may mask the issues in the business. So a lot of times, like headlines, the mainstream media will look at like, wow, your floor price is so high, you're so successful, but your floor price may mask the issues in the business. So these are three things that I think founders have to be very careful of, not to be too carried away if you are a founder in a project right now with a very high floor price, and also to not be discouraged if your business is actually doing well and your floor price is low. I think this could be masking issues for. It's easy to mask it with just like a floor price, or floor price or your token price. Okay, these are lessons for founders. Okay, some personal thoughts. One key partner that I think Artifact could have, maybe had, which I think could be sick, right? Could be insane, would be, what if they partner with a company more like high fashion, like Dior or Chanel, and they do more very high-end exclusive access just for the Clone X, and do some low ticket to create like mass distribution for both parties. I think there's like so much opportunity for something like that to happen in the space, and I really look forward to it. I think I only see like Pudgy and maybe Veefriends doing something of this nature, but I think a lot of projects could leverage on this. Next thing would be something that I thought of was, would Artifact work without Nike? If Nike didn't buy Artifact, would they be in a different position right now? I think yes, because if I was the founder of Artifact and they acquired me for like $100-300 million, it changes the leadership sentiment. Let's say they had 3 co-founders. Maybe one co-founder's goal was just to make $10 million net and then just fuck off and chill on an island. And the other 2 founders are super hungry, right? I just have a strong feeling that the money probably changed the game for them. And yeah, it'll be interesting to think of what if Nike didn't buy Artifact. Where would Artifact be today? Some ideas for Nike that I thought could be. Okay, this is like, let's say if I was Nike CEO and I was speaking to like CEO of Artifact, right? What if CloneX had a royalty of every shoe sale that was designed by Artifact? What if Artifact designed a shoe that was in Nike's main catalog and they sold it for like $200, and CloneX holders got an actual royalty of this? I think that would be sick, and I think Nike could have done that. I think the reason why they didn't do that is because of regulation. Who knows? This is my guess. So I hope anyway, this is my guess. Second part is, I think they could have done like exclusive invites to sports events. This is the CloneX section. Nike, like the teams that Nike sponsored, they usually have like a giant booth, right? Let's say like an NBA team that they sponsor. This is the Nike section for their clients to watch the game. Why not get some CloneX members to come? And you don't need to give it to all 5,000. You could just give it to the ones that have specific traits or do something creative there. I think this is all low-hanging fruits for Nike that I think they could have done. Next thing would be, this is something I shared earlier, but what if the best-selling sneaker for Artifact, or the one that everyone loves, a version of that to be on the actual Nike catalog, right? Like there was room to have like an Air Force One type of thing, like a staple inside Nike, where this is the Web3 Nike design shoe, and every collaboration would just have new designs of the original design, like how like Air Force Ones have this right now. Hard to pull off for this one, but yeah, I just thought that they had opportunities for all of this. Okay, last thing. So this is just me for fun. If I was the CEO of Artifact and I have like so many freaking issues going on in the business, what would I prioritize? How would I allocate my resources and prioritize the business? What would I do in a business, let's say in mid 2023, to get the business back and to grow it? I would allocate all my resources to make sure that the business is cash flow positive, it's profitable. And that would mean working on the operations and the sales part, which is going to be like very unsexy. Maybe even the NFT holders will hate it. But I think for the longevity of the business, I think it's going to work. That's what I would have done. And I will leverage more on the strengths in design. I'm not sure if they really like leverage it crazy aggressively. I think that they were the kind of team that they wanted like a perfect design before they sold it. But maybe I would have just shipped like 8 out of 10 design. But okay, this is me, right? Like the leader reflects the business a lot. And they really had the opportunity to be a category leader for a specific type of profile picture. I still think that they do. I think someone who acquires Artifacts, maybe me and someone else, who knows? Maybe a few investors can come in and buy Artifact. I think that because they already built so much brand equity in the space, people still like the Artifact. Even now that the business is dead, people are still buying, like spending a few $100s to buy the CloneX NFT. Think of how crazy that is. The project is dead. Nike said they're shutting it down. People are still buying their shit. Think of how crazy that is. I think they have sick design. I'm not I'm more of a punk Bored Ape. I resonate more with their PFP, but I respect their design a lot. The last thing is, I would probably do something more e-com heavy, because I have an e-com background, so probably something more e-com heavy. I would do like CloneX merch, do CloneX like toys, sell it on Amazon, sell it at Walmart. I would just do this at scale, have gifts, have maybe even like, what's it called? I would look to do a big partnership with CSGO. Yeah, this is what I would do. Okay, this is the end. This took way longer than I thought. 10-hour video. I could have went way longer for each section, but I gotta have dinner. Your boy has to eat. I'm hungry as fuck. Okay, this is a bit about myself. I'm a Singaporean entrepreneur and angel investor. I dropped out of Edinburgh and Stanford University. In my first year, I bootstrapped an Amazon native brand to 100,000 customers, and I sold it to AutoFit last year. I've also built a health SaaS company and served 2,000 clients with 8 or 9 coaches. I currently run Minted, which is what you guys are listening on right now, which is a media platform that helps internet native entrepreneurs, builders, and investors navigate the complexities of the Web3 ecosystem. And I would really appreciate if you guys can comment below what you guys found the most helpful in this breakdown, and also what you guys didn't like. I'm looking to really improve the content and make this the best type of Web3 content for this group of audience. You know, like I always felt like this, me being in the Web3 space for 7 to 8 years, I always wanted content that really goes into the granular of building or genuinely like investing in the space. And you know, like I have nothing to like I have no project or token to sell you guys. So I just want to have this type of content. I just think it's so valuable. And yeah, I just think like I'm grateful that I'm able to do this without having the like to be stuck with like, okay, I have to say this because I have to sell a token later. I can just say it because I genuinely think it's the best way people should run their Web3 business. Here are some references of all the things I've said in the video. So all the information I got about Artifact are all here. If you guys want to look at it, you guys can look at it. I'm not even sure if some of them are accurate. This is what I could find online. And yeah, hope you guys enjoyed the video and appreciate you guys taking the time to listen to this.
So you mentioned that Artifact was a vision-led company. In your view, how can, let's say, very visionary companies and founders protect the spark, this really creative side, while also building operational depth?
Find a co-founder that complements your skill sets. There are books around this. I can't remember on top of my head right now, but usually there will be one person who's the visionary and the other person is more like the operator and manager. Like find someone who loves the operations of it. It's rare to have a combination of both. Some people do. I don't. But there are people who have both. I would say get a co-founder. This person to me has to be a co-founder level. For me at least. If you know what, like it depends on the type of company. But for Web3 companies, I would say the ones I see, I think that they need to have a co-founder. Like for Artifact, co-founder who is operations heavy. You need someone like that because the vision guy, the vision person would be looking to sprint all the time and looking to move like super fast and very excited. And the operations person will almost be like the brakes. So although it's good to accelerate and to move quick, like speed in today's world is very important. But when you drive a car, you also need some brakes.
So you touched on the idea of building a sales team for NFTs. Currently, it seems that Web3 companies often avoid traditional sales strategies. Do you think this is an ideological issue or a capability gap?
I think there's two parts. One would be Web3 definitely doesn't, or at least at the moment, Web3 definitely has a lack of talent compared to Web2 for now, but there's definitely a migration happening for sure. And second thing would be, I think what you say is true. It seems that there's definitely this ideological view of everything has to be automated, everything has to be decentralized, and usually the best is to use both, right? So if you look at, let's say, traditional brick and mortar businesses, having brick and mortar with e-commerce usually absolutely crushes. Right? Usually you need some degree of both. And I do think that there's also this lack of coolness factor of doing sales type of roles in NFTs. Maybe they're calling it something different. Maybe you can call it something different because it's not necessarily like a typical sale. It's a bit like a curator or like onboarding. Like I'm onboarding you into my community through picking a very exclusive NFT project, right? And I think Punks does a great job of doing this, even without a CEO really running the company. It's just more of like just there sitting, and people are just ad hoc figuring out ways to make a career out of selling punks. You know, like some punks, the rare ones are worth a condo. You have real estate agents. Why not have people looking around? Why not have the NFT version of that, especially for very, 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 very high ticket? type of NFTs. Super high ticket. I think it's worthwhile. Yeah. If you do the math, like, okay, someone can do the math. Like, let's say you have 10,000 NFTs, 4,000 or 5,000 holders, right? You get a X amount of people who are doing this sales or curation or whatever you want to call it. Every day in your Discord, probably there's like 30,000 people, 30 to 40,000 people, let's just say. People who comment, people who are typing, who are engaging in the community, go and chat with them. Those are like inbound leads. Those are hot, like inbound leads. Talk to them. Even if out of 10 you close one, is like a 5 to 6 figure sale. Like, okay, 4 to 5 figure sale. Yeah, like, I think it's so worthwhile. Or maybe I'm missing something huge. Because, okay, like full disclosure, like, I've not run my own NFT company before, right? Like, I'm more running, like, my background is more e-commerce, SaaS. I've ran did sales before. More like e-com businesses. Like, I have not ran specifically an NFT project. But when I observe, like, but to me, business fundamentals are business fundamentals. Even when I see the products that I think are doing really well, they have some sort of sales strategy inside. Can't run from this. Yeah.
What would you say at the moment is the single most misunderstood thing about building in the Web3 space?
That you need to drop a token. You can build a Web3 company without dropping a token at all. Or at least you can wait a long time before dropping a token. So if you look at projects like Hyperliquid, I think Kaito, if I'm not wrong too, they waited until they had some level of product market fit, then they launched a token. And I think that's like really strategic and smart of them to do that, instead of launching a token on day one. Unless you're so freaking confident in your business, I would say that's the biggest misconception.